This is absolutely shocking. People who spent years as Ethereum maxis are finally starting to see the light when it comes to Ripple and XRP. I never thought I would be hearing clips like this said this clearly on a show that has historically leaned Ethereum, Bitcoin, and Solana, but here we are. What you're about to hear and what we're about to break down is not a throwaway opinion. It's a public admission that the narrative Krypton natives have mocked for years is starting to collapse under the weight of execution, facts, and results. This is a 6-minute clip, and every single word matters because it confirms something this channel has understood long before it was acceptable to say out loud. If you want to understand how to position before these shifts become obvious headlines, how capital actually moves, how narratives flip, and how long-term asymmetric strategies are built around XRP. That's exactly why the XRP Insiders Elite exists. It's a focused framework for serious holders who want signal over noise, strategy over emotion, and positioning over hype. It's in the video description. What makes this moment so powerful isn't just that Ripple is being acknowledged, it's who is doing the acknowledging. When analysts who built reputations dismissing XRP suddenly stop, pause, and say, I was wrong, that's not noise. That's a signal, especially when they admit that Ripple is the only project that actually used its treasury strategically, acquired real companies, expanded distribution, and built real business lines while everyone else argued on crypto Twitter. This isn't hype. This is someone publicly rewriting their investment thesis in real time. The most important admission in this entire conversation is simple but devastating to the old narrative. Ripple executed while others talked. For years, critics said Ripple was too centralized, too corporate, not crypto enough. Meanwhile, Ripple quietly built regulatory relationships, acquired brokerages, custody providers, prime brokers, and settlement infrastructure. And now, the same people who marked that strategy are admitting that decentralized governance without centralized product decision-making doesn't win markets. Distribution wins markets. Liquidity wins markets. Execution wins markets. That's the pivot point we're living through right now. Ripple didn't just survive the regulatory storm, it used it as a moat. While Ethereum struggled with unclear leadership, conflicting narratives, and insiders selling into ETFs, Ripple leaned into what institutions actually need: compliance, clarity, licenses, and reliability. When someone says they are more optimistic about Ripple's business development muscle than any other project in the space, that's not a casual comment. That's an acknowledgement that Ripple understands how value actually compounds in financial markets. And here's the part that most people still don't fully grasp. This shift isn't about price action today. It's about who is positioned to absorb real economic flow tomorrow. When XRP stops being traded primarily as a speculative asset and starts being used as a settlement asset, volatility stops being a feature and becomes a liability. Payment rails don't tolerate 30–40% swings. Liquidity provisioning at scale requires depth, stability, and trust. That's why infrastructure assets don't behave like memes long term. They reprick structurally. One of the most revealing parts of this discussion is the discomfort in the room. You can hear it when someone says they're more bullish on Ripple hitting an all-time high than Ethereum. The room goes quiet, not because it's outrageous, but because it forces everyone else to confront a reality they weren't ready to accept. Ethereum, for all its developer activity, still lacks cohesive product leadership. Ripple, by contrast, has a clear corporate strategy paired with a decentralized ledger, and that combination is proving far more effective than ideology alone. This is where the conversation shifts from tribalism to fundamentals. Ripple raised capital, deployed it intelligently, and bought real businesses that extend its reach. Hidden road, prime brokerage, custody wallets, settlement rails. These aren't vanity acquisitions. They're distribution channels. They are leverage points, and they allow Ripple to grow into its valuation instead of relying on narratives to defend it. The irony is that many critics now admit Ripple may actually be undervalued relative to what it controls. When you compare XRP's fully diluted valuation to legacy infrastructure like Visa, the gap isn't as absurd as people once claimed, especially when Ripple has the ability to use its native asset as acquisition currency. That's an advantage most crypto projects simply don't have. Another critical point raised almost accidentally is how damaging conflicting leadership has been for Ethereum. When public figures say one thing on stage and another to investors, trust erodes. Institutions notice that. Markets notice that. Ripple's leadership, whether you like them or not, has been consistent for over a decade. Brad Garlinghouse hasn't wavered on the role of XRP, on regulatory engagement, or on institutional adoption. That consistency is now paying dividends as the market matures. And then there's Swift. For years, people treated the idea of Ripple replacing or displacing Swift as fantasy. But listen carefully to what's being said now. Swift is messaging without liquidity. Ripple combines both. Swift is slow, expensive, error-prone, and architecturally outdated. Ripple settles faster, cheaper, and with fewer failures. When former Swift board members join Ripple, that's not symbolism. That's insider acknowledgement that the old system isn't sufficient for the next era of finance. This is why the conversation around XRP is changing. Not because retail suddenly got louder, but because institutions are quietly validating what XRP was designed to do. Reducing remittance costs from $20 to $2 and increasing usage by 800% overnight isn't marketing, it's product market fit. The most telling line in the entire discussion might be this: Ripple is a force not to be reckoned with. That's not said lightly by people who once dismissed it entirely. And when those same people admit that crypto natives have been wrong year after year by fighting momentum, fighting narratives, and fighting execution, you should pay attention, because markets don't reward being early forever. They reward being right when it counts. And as this conversation naturally moves forward into what 2026 looks like, tighter liquidity, harsher conditions, fewer survivors, the question becomes less about who has the loudest community and more about who has the balance sheet, licenses, and infrastructure to endure. That's where Ripple's positioning becomes impossible to ignore, and where the next part of this discussion starts to get very uncomfortable for anyone still clinging to outdated assumptions. The reason this conversation feels so uncomfortable for a lot of people is because it exposes something that crypto culture has avoided for years. Ideology does not outperform execution in the long run. Decentralization as a belief system is powerful, but decentralization without coordinated product strategy has serious limits when you're trying to build global financial infrastructure. What we're watching right now is the market slowly internalizing that truth, and Ripple sits directly at the center of that realization. When Santiago says decentralized security with centralized product decision M is the winning model, he's not describing a theory. He's describing what has already worked across every major technological revolution. The internet itself didn't scale because every decision was voted on by anonymous participants. It scaled because protocols were open, while products were guided by strong leadership and clear incentives. Ripple understood this early, and XRP was architected to function within that reality, not fight it. This is why comparing Ripple to other crypto projects purely on token price performance misses the point. XRP isn't trying to win a meme cycle. It's positioning itself as a neutral bridge asset capable of settling value between systems that don't trust each other. That role demands regulatory alignment, liquidity depth, and operational reliability, none of which emerge from chaos. They emerge from coordination, and that's where many crypto-native projects have struggled. Ethereum's innovation is undeniable, but innovation without unified direction has consequences. Competing roadmaps, public disagreements among core contributors, and inconsistent messaging to institutions all create friction. When large capital allocators look at that environment, they don't see decentralization, they see governance risk. Ripple, by contrast, presents a single coherent face to regulators, banks, and enterprise partners that matters far more than crypto Twitter likes to admit. Another point that deserves far more attention than it gets is how Ripple uses capital. Most projects treat their token as something to defend or speculate on. Ripple treats XRP as strategic ammunition. When they raise capital or unlock liquidity, it's not to inflate valuation optics, it's to acquire real-world capabilities. Prime brokerage gives them institutional access. Custody gives them asset control. Settlement infrastructure gives them flow. Each acquisition compounds the utility of the network rather than diluting it. That's why the idea that Ripple might grow into its valuation isn't outrageous. It's logical. Valuations become fragile when they rely on future narratives that haven't been built yet. Ripple's valuation, while controversial, is at least tied to tangible business lines that generate leverage over time. That's a massive distinction as markets move into a more constrained liquidity environment. And that brings us to 2026. The assumption that all crypto assets will rise together in the next cycle is a relic of the past. As liquidity tightens and risk appetite becomes selective, capital will concentrate around networks that can demonstrate resilience, revenue, and relevance. This is where Ripple's regulatory posture becomes a weapon rather than a liability. When enforcement was aggressive, Ripple stayed engaged. When clarity began to emerge, Ripple was already compliant. That means when institutions finally step in size, Ripple doesn't need to scramble. It simply scales. This is also why the discussion about all-time highs is more than just price talk. When someone says Ripple has a higher probability of revisiting or surpassing its all-time high than Ethereum in a downturn, they're implicitly saying Ripple has a clearer path to sustained demand. Demand rooted in usage behaves differently than demand rooted in speculation. It doesn't disappear when sentiment turns. It slows, consolidates, and then resumes. That's the core misunderstanding many still have about XRP's long-term trajectory. They expect it to behave like a high beta trade when in reality it's being engineered to behave like infrastructure. Infrastructure doesn't move explosively forever. It reprices structurally as adoption locks in. The first major revaluation isn't the end. It's the beginning of price discovery under a new regime. This is also why volatility becomes a liability once XRP transitions into heavy settlement use. Institutions don't tolerate instability in core rails. Liquidity depth absorbs shocks. Volume dampens swings. Over time, price becomes less about emotion and more about throughput. That's a radically different market dynamic than most crypto participants are used to, and it's why many will miss the significance of the early signs. The Swift comparison highlights this perfectly. Swift isn't dying in the dramatic sense, but it's being outgrown. It was built for a world where settlement could take days and errors were acceptable friction. That world no longer exists. Ripple's model, instant messaging plus liquidity, collapses layers of inefficiency that legacy systems were never designed to handle. When remittance costs drop 90% and usage explodes overnight, that's not a marginal improvement. That's a structural advantage. And notice how quietly this is happening. There's no viral hype campaign, no celebrity endorsements, just steady onboarding of banks, payment providers, and infrastructure partners. That's exactly how systems that matter evolve. Loud narratives attract attention. Quiet execution attracts capital. The discomfort among commentators during this discussion isn't ideological, it's psychological. Admitting Ripple's strength forces a reevaluation of years of assumptions. It means accepting that being right culturally didn't translate into being right financially. And that's hard, especially for people whose identity is tied to certain chains. But markets don't care about identity, they care about outcomes. The fact that someone can openly say Krypton natives have been wrong year after year by fighting momentum and execution is significant. It signals a broader shift away from maximalism and toward pragmatism. As the space matures, the question isn't which chain do you like, it's which system actually works at scale under regulation. Ripple's answer to that question is becoming increasingly difficult to dismiss. And as this realization spreads, it doesn't arrive as a sudden epiphany. It arrives as a slow, uncomfortable consensus shift. First from analysts, then from allocators, then from infrastructure providers, and only much later from retail participants who are still arguing old debates, while the market has already moved on. Which brings us directly into the growing tension between narrative-driven frameworks and technical reality. Because as adoption accelerates, misinformation becomes more dangerous, not less. That's where the conversation starts to turn toward recent controversies, conflicting interpretations of XRP's role, and why understanding how the ledger actually works matters more now than ever. This is not financial advice. As XRP moves closer to being treated as infrastructure rather than a speculative instrument, the quality of information surrounding it becomes critically important. This is where the conversation has recently taken a sharp turn and not in a good way. When an asset begins to matter systemically, bad analysis stops being harmless opinion and starts becoming a liability for the community. We're now seeing that tension play out in real time. The recent backlash surrounding misleading XRP frameworks isn't about ego or personality conflicts. It's about technical reality versus narrative invention. The XRP ledger is not a blank canvas for abstract theories. It's a live production grade system with defined mechanics, known constraints, and documented behavior. When people attempt to retrofit grand theories onto it without understanding how settlement, liquidity, AMMs, or interledger actually function, they don't just confuse newcomers. They undermine credibility at the exact moment credibility matters most. This is why responses from technically grounded voices hit so hard. When someone with a deep understanding of the XRP ledger calls out misinformation as fundamentally worthless, it's not drama, it's damage control. Because the closer XRP gets to real economic throughput, the less tolerance there is for fantasy. Institutions don't onboard onto vibes, they onboard onto specifications, guarantees, and repeatable outcomes. What many fail to realize is that XRP doesn't need exaggerated future promises to succeed. Its value proposition is already sufficient. It doesn't need secret flows, hidden ledgers, or speculative monetary myths. It needs clarity, it needs trust, and it needs consistent execution. The irony is that overcomplicating XRP's role actually weakens the case for it, because the real strength of XRP lies in its simplicity as a bridge asset and its reliability under stress. This is also why the shift from speculative trading to settlement usage represents a psychological challenge for much of the crypto market. Speculators are used to volatility narratives and dramatic price predictions. Infrastructure investors are not. They care about uptime, throughput, and integration. As XRP increasingly aligns with the latter, it will naturally alienate those who only understand the former. And that's okay. Markets evolve by shedding participants who no longer fit the dominant regime. Early Bitcoin adopters weren't day traders. They were conviction holders who understood asymmetric systems. The same principle applies here. XRP doesn't require constant excitement to succeed. It requires consistent flow. Once settlement volume reaches a critical mass, price becomes a function of utility rather than belief. At that point, debates fade because the ledger speaks for itself. This also reframes the endless price target arguments that dominate social media. Asking whether XRP should be worth a certain number misses the deeper question. What happens when trillions of dollars in value need to move efficiently across borders, jurisdictions, and currencies? Bridge assets don't derive value from scarcity narratives alone. They derive it from necessity, and necessity is far more durable than hype. Ripple's strategic advantage here isn't just technological, it's temporal. They started early, they endured regulatory pressure, they built quietly while others chased cycles. That gives them something incredibly valuable. Time. Time to refine products, time to deepen liquidity, time to align with regulators instead of reacting to them. In markets, time is leverage. This is why comparisons to legacy infrastructure like SWIFT, Visa, or correspondent banking systems are no longer theoretical. They're operational. When a new system demonstrates faster settlement, lower cost, fewer errors, and higher scalability, incumbents don't collapse overnight, but they do start to lose relevance at the margins. And in financial systems, margins compound. Another subtle but important shift is happening beneath the surface. Patience is returning to the market. After years of hyper-SP speculation, capital is becoming more selective. That favors projects with durability over those with momentum alone. Ripple's approach, sometimes criticized as boring or corporate, suddenly looks prudent. Stability is attractive again. Predictability is valuable again, and XRP fits that environment better than most. What we're witnessing now is not a sudden flip in sentiment, but the early stages of normalization. Ripple is being evaluated less as a crypto experiment and more as a financial infrastructure company. XRP is being discussed less as a trade and more as a component. That's a fundamental reframing, and it changes how outcomes should be judged. This is also why disagreements within the community are inevitable. Some people will always want XRP to behave like a speculative rocket ship. Others understand that infrastructure scales differently. Neither group is malicious. They're just operating under different assumptions. The danger arises when loud narratives drown out grounded analysis, especially for newcomers trying to understand what they're actually holding. At this stage, the most important skill isn't predicting short-term price movements. It's understanding the role XRP is being shaped to play. Once you grasp that, timelines matter less and positioning matters more. You stop reacting to noise and start evaluating signals. You stop asking when moon and start asking, where does this fit in the system that's being built? And that's ultimately what separates participants who benefit from structural shifts from those who chase them too late. Ripple doesn't need everyone to believe at once. It only needs enough usage to make disbelief irrelevant. When liquidity routes through the ledger because it's cheaper, faster, and compliant, arguments dissolve. Markets don't debate efficiency, they adopt it. That's the phase we're entering now. If you want to stay grounded through that transition, understanding real positioning, separating signal from noise, and navigating XRP with a long-term strategic mindset instead of emotional reaction, the XRP Insiders Elite is built for exactly that. It's a serious environment for people who want clarity, conviction, and strategy as this next phase unfolds. You'll find it in the video description.